Jamie here. Hope everyone's doing outstanding. April 29, Tuesday, 8:56 a.m. So quick about the market, some names I'm looking at go from there. S&P futures been bouncing around, pretty much flat all morning, back it slightly into red here. S&P futures down about a tenth of a percent. I guess you got Besson talking more around talks with China. Uh, Anyway, so the starter weeks pretty much flat. So if you read the newspaper, folks read the newspaper this morning, like, oh, markets are flat, probably nothing going on. But at 1:30 yesterday, the S&P was pretty much down 1%. Dow was down 300 points. You see all the headlines, um, and then sure enough, just a bounce. And to the end of the day, closed slightly in the green. No news, no catalyst really to speak of. And now there's a lot going on this week with earnings kind of taking the forefront. And then I mean we'll have continued headlines. Today, Trump is going to be at a rally in Michigan, so I'm sure there's going to be some headlines. They've already talked about the auto tariffs, which was kind of the first shoe to drop in this whole tariff situation, I guess you would call it. I'm sure there's going to be some news already, right? They're going to probably ratchet back tariffs on domestic car manufacturers, the parts, the whole situation where the parts might get tariffed, 15 different times because the parts go across borders multiple times. So they'll probably address all that. Um, and so we have that. We have earnings. So after the close, I think is Visa. Tomorrow's Cat. There's a lot of other names reporting. And then after the close tomorrow's big Meta, Microsoft. GDP number comes out too tomorrow. So GDP now for Atlanta was forecasting a negative 2.2%. I think was the final read. You got to think it's going to be positive, like 1% maybe even more than that. So that's kind of that. We did get some earnings today, and there's been words, right? A couple months ago, I was talking about uncertainty, pretty much before everybody started talking about uncertainty. Now, I think when you start seeing the earnings, and of course, you can do searches on all the transcripts, and they'll highlight how many times this word was used, whether it be, uh, the U.S. dollar, obviously the tariffs, uncertainty, all those buzzwords. Today, Coca-Cola, right? Manageable. I think that hopefully we start seeing that word come through. But you had some earnings that can kind of help give some color, uh, at least in regards to what's going on with tariffs. But first was GM. So GM, headlines will say, oh, they pulled back their guidance. They're not issuing guidance, but they're going to do a conference call on Thursday. And I think that's all because they know that Trump is going to come out with some numbers, right? And once they have concrete numbers, then they can go and announce it on Thursday. So I think more of it's just a function of that than uncertainty. So they'll have well, guidance is never 100% certain, but better color on that. So I don't think that should be as negative. And then UPS too. I mean, it was up. I don't even know if it's still green. They reported a strong quarter, but they're cutting jobs. And again, it would look like, oh my gosh, if you look at what would be a pretty good indicator of the global economy and even domestic economies, names like UPS, FedEx, the shippers, trains, all that fun stuff. But more of that is because of Amazon. And that deal's been for a while that Amazon's pulling back from UPS. So there's that. So we have Coca-Cola, we have GM, PayPal reported earnings this morning. That was strong as well. Um, Slight miss, but here on the revenue side, but their story has been a tough one. It's like a turnaround story, and they started out last year. Uh, so all right, so that's kind of the overall market. I hate chop. Chop's not good for premiums on options. Uh, that's kind of what yesterday was, unless I was saying on the rant yesterday afternoon, unless you exactly time the top, right? You get the puts, close the puts at the bottom at 1:30, get the calls at the bottom, and close those out. And then premiums are a little elevated because it started a week. So even if you're doing weekly strikes, makes it difficult on a risk reward basis. So only made one trade yesterday. I'll probably keep things small today as well, pending if I see any decent. Obviously, if I see some decent setups, of course I'll take some more risk on. But would not be surprised to see more chop again today until there's got to be some trade deals, right? So I put it on the watch list too. It's like a tug of war, and yesterday was like a tug of war between. I think there's still two clear sides to the market right now. There's the folks who think we're already in a recession, that the market hasn't hit lows yet, and we're going to revisit lows at some point in the coming weeks and months. That's the one side. And the other side is this is all going to work out. Deal's going to go get hatched out over the coming weeks, and market's going to be back at all-time highs in the next six to 12 months. So because of that, outside of catalysts, it seemed like right now there's a tug of war because a couple of weeks ago, obviously the bull side was tough to create a bullish scenario. Now I think the longer we go without doing a trade deal, it's going to go back to that side. But for now, it's a tug of war until we get some deals worked out. So hopefully we get something, whether it be India, or Southeast Asia, one of those countries, and obviously China would be the big whammy. All right, so that's kind of overall markets. Take a look at the VIX, pretty much flat yesterday, and then the amount of stock trading over there, 200-day moving average on the S&P heading in the right direction. Yields, which were actually a little lower this morning, actually look like they're going to head a little higher here, the US dollar. So all those stories over the last couple of weeks that were not good stories in regards to the US being a safe haven kind of asset, the dollar and treasuries is kind of that story's gone away, right? And now they'll move on to other stories. All right, so that's kind of the overall market. So now just individual names. Roku up over 3% yesterday. Actually, it was at 3.7%. They report earnings Thursday after the close. My calls are solidly in the green. I'm hoping to get an opportunity to close them out for 100% to cover costs, hopefully today. I think once it breaks 70, it's off to the races. You look at its 50 and 200-day moving average. Right there, it's 72 and change. I keep posting my little tidbits. I did it yesterday. Like 80+% of their revenue is all just platform monetization. People sold it off like it's a hardware company. They do 13% of their revenues as hardware. And not only that, it's negative margin. So the hardware side of business, they lose money on it, right? So if they just did 100% was just on platform monetization, it's like a 54% margin rate. So obviously, I mean, you take a look at the stock, it's up 7 days in a row. But take a look at where it's come from. So you take a look at earnings too. Its last earnings, monster quarter, all the way up to 105. And Roku has had a history of not doing well after monster earnings. So last quarter was kind of like the first time it really did well, and then it just gave it all back. No news, no catalyst. I don't want to be in the spot. Again, the market, I could be 100% bullish on Roku for the next 5 years, and the story may not pan out for 10 years. But just I could be bullish and right, but I might be wrong right now. So I don't want to be in a spot where I'm wrong this quarter. So that's why the thought of not holding, I don't want to hold the entire risk into the earnings. All right, so that's Roku. CMG disappointing, right? Hit the highs at about 10 o'clock, all the way up to 52.50. My calls were up near 400%, or the last couple of those, and then I just held on to them, and then it melted for the rest of the day. Closed down 1.7%. Still like this one for upside. If you take a look, there's some seasonal trends. Yes, last year and the year before, the stock was up like 9%, 13% into Cinco de Mayo. I don't know. Maybe we get some deja vu here with that, but still like this as a setup. I'm obviously going to hold my lottos. 50-day moving average 50.46 came down to 50.72. Hopefully that holds. And of course, SPY's hitting lows here right now at 9:03. I don't know if that's Beston's comments, which it's like the headlines just gets exhausting after a while. Okay, then some other names. Oh well, I don't know why I don't have Restoration Hardware. RH disappointing yesterday. It was only down 1%, but the premiums got crushed. Just frustrating as well. I still like that one, and for 200 this week, pending any catalyst, if there's news from the CEO, buyback, special divvy, something like that. What's more frustrating is Wayfair finally picked the time to really start to break out, up to over 30.99, hitting multi-week highs. That's a name I might watch. I think actually they might have earnings this week, right? I have to go look, and SPY's hitting lows here. 547.95. So 547 is the first big spot on the SPY. Then 545 was the lows from yesterday. And then other names. So I was talking about PayPal too. They reported earnings this morning. It was lower, and I'm like, why? You look at the results. I'm like, it's great results. And not only that, I mean, the stock was in the high 80s back in February. I mean, all stocks have fallen. So it's not it's not the outlier here, but I think there could be a nice bounce opportunity. Unfortunately, it was in 62s to look great. Now it's back up over in green. So don't be surprised if they had some spec lottos on that one. Pfizer reported earnings this morning. In their investor letter or prepared remarks, they talked about not still wanting to have a piece of the obesity space, which since they just canceled their phase 3 study 2 weeks ago, you have to. They mentioned that they are on the lookout for either partnerships or M&A. So you have to think VKTX, GPCR, Altimmune, Turn Pharmaceuticals, all those names in the GLP-1 space. So VKTX, which I've been trying to stay away, I might start nibbling some strikes, maybe further out of the money in the 30s, because you have to think at some point, not only at some point they gotta do something, and not only that, some of these bio names, if you were looking to do M&A in the GLP-1 space last year, you're paying 100-200% more for the names, and these names have come down so far that it's like they're at a discount. So I mean, you look at VKTX, it's got a huge cash hoard. All right, so that's kind of the thought process there on VKTX. But you take a look at VTX, hasn't been over its 50-day moving average in months. So 2685 is the key spot. It's running up a little bit here in the pre-market. I don't know if that's some of its Pfizer. Also, Hims and Hers had a news partnership with NVO. Um, Big news for Hims and Hers because they were just selling the compounded solutions, which, I mean, yeah, at some point the FDA was going to remove the emergency supply order, and then at some point that comes out of their revenues. Still, they still have other revenue drivers, but big news for them. So that's Hims and Hers. And then last but not least here is Spotify. And, Spotify, great quarter, maybe a slight little miss there. CEO was a little cautious, just said some noise in the near term. But you take a look, I mean, stock's been on a monster run since April, right? April 7th, the stock was $400, went all the way up to 620. So maybe some of it's just a function of the big run it's had. Could be a nice bounce play today. So it's down here at 558. Premiums might be a little pricey. I mean, it won't be as pricey as they were yesterday after the close. But if I can find some 570, 580 spec lotto calls, I might look to nibble some. Just because if you look at Spotify, the story always used to be that they're unprofitable. They're just subsidizing. They were never profitable, right? That was pretty much the entire bear case. The stock was always languishing in hundreds and 200s, despite huge member growth rates, revenue growth rates, things like that. And then finally, they became profitable. So now it's like the stock and the company is like on a trajectory of it's probably gonna be $1,000 stock in the coming year or two, regardless of what happens with the overall market, right? It's just, similar. I talk about Netflix and it's somewhat recession proof. Same with Spotify, right? I think it becomes, it's like it's like drinking coffee in the morning, right? People, you don't just say, oh, there's a recession to stop drinking coffee. I think similar with Spotify. It's like you don't just wake up one morning and say, I'm not listening to my playlist, my music, my workout music, or go to work or the podcast. So it's like a whole thing that I think is part of someone's lifestyle where I don't think they give it up, and it's not like it's a premium spending, you're not cutting a $200 gym membership. So rants for other days, folks. Let's have a great day. I'll be back on audio later. Rock and roll. Oh, and if there is market shenanigans, 545 on a SPY. I mean, I won't be quick on the trigger, but SQQQ calls will continue to be what I look to do hedges. All right, let's have a great day, folks. Rock and roll.